Hey folks, welcome you all to a new video. This is CA Ganesh Bharadwaj. So I hope your preparation is coming along fine as your exams are just around the corner. So I thought in this video, we will revise your costing theory, right? Which carries a weightage of solid 14 marks in your exam. So by spending less amount of time, let us try to capture this 14 marks of theory component in your costing paper. Now, generally guys, generally in your exam, right, in case you are finding it difficult to attempt your practical or descriptive questions, right, at times it can be a little tricky, at times it might not strike you, or at times the question paper could be lengthy. In that case, it is this theory question that comes to your rescue, right? So always, whether to write theory or not, do not skip theory before you enter the exam hall. That's a mistake that many students do. You prepare for theory, and in the exam hall, you decide whether you want to write the theory or not, depending on how the question paper is, right? And in this video, I have analyzed some past trends, and based on that, from my perspective, I am going to share with you all certain important theory areas, right, which I will be doing using our concept decoder book, right? So this book can be downloaded. It's a color book. The free PDF can be downloaded from our website, right? So you can download it free of cost. Now guys, in every attempt, your theory question is actually the last question, number 6, right? That is basically your theory question. Now, in this question number 6, generally, the breakup of that is 5 plus 5 plus 4 or 4. So, in the last question number 6, you have one 5-mark theory question, then you have another 5-mark theory question, and then the last subdivision 6C is generally a 4-mark question. However, you have an internal choice here, right? So there is an added advantage. If you are attempting for theory, out of 18 marks, you need to attempt for 14 marks, right? And guys, in your exam hall, I have kept on many a times, I've just told you this, you have to write for 100 marks, and you have 3 hours of time. So you have 180 minutes. From that 180 minutes, reduce this 10 minutes. They'll ask you to sign and stick all this barcode and all, remove that. So 170 minutes effectively, let us keep. So you have 170 minutes. In that, you need to attempt for 100 marks, which means for every 1 mark, you have on an average 1.7 minutes. Or in other words, for a 10-mark question at max, you can spend only 17 minutes, right? This is the maximum time you have. Now, in certain cases, your descriptive questions might be a little lengthy. In that case, this theory question number 6 will definitely come to your rescue. And guys, trust me, it is not a very huge difficulty, or it's not actually a rocket science to crack this kind of this theory question number 6, because trust me, based on my past experience, this theory question generally comes from your first chapter of your study material, basically your introduction to cost and management accounting, that chapter. Certain other chapters like material, your labor, your budgeting chapters, there are certain areas from where your theory question generally keeps coming. And over and above that, it can come from any other chapter. It could be practical, concept oriented. So if you know the concept, you will be able to handle it. So in this particular video, I am going to discuss certain important theory concepts, theory areas, so that if this comes in your exams, directly you can just score this 14 marks that easily, right? Because it takes very lesser amount of time to prepare for theory. And number 2, even in the exam hall, you will be able to write this theory question within the required time frame of 1.7 minutes per mark. So this is the beauty of theory. So whether you want to write this theory or not, take the decision in the exam hall. Don't omit theory and go. In that case, it's going to be a suicide mission, right? So on that note, let's get started. So I will try to cover maximum amount of all the important theory areas, right? Only the important things I'm going to cover right now. There's no point in reading everything. So even if you're watching this the day before your exam, or even on the morning of your exam, trust me, there is definitely going to be a value addition for you, because such is going to be the kind of questions and concepts that I'm going to pick and do in this particular theory revision, right? On that note, let's get started with the first, the first introduction to management accounting chapter. So as per our concept decoder book, I've kept it as the last chapter for theory separately. Now, in this, certain concepts are pretty much important from a theoretical viewpoint. So, yes. Now, the first concept, the first theory segment that we are going to look at is the difference between cost control and cost reduction. This is one popular theory examination, theory question in your examination. Now, what is the difference between cost control and cost reduction? Look at this. Cost control, it focuses on maintaining cost as per the standards, right? It aims to achieve the lowest cost under the current conditions. Emphasis is on past and present. It is a preventive function, that is, it tries to keep costs in check and it stops once the target is achieved. Whereas cost reduction focuses on reducing the cost by challenging the existing standards, believes no condition is permanent, emphasis is on present and future, it is a corrective function and it's a continuous process. Sir, what is the meaning, sir? Can you just give us an explanation? Very simple. Now guys, cost control, what do you mean by this? It is something similar to what we do in standard costing. Let us say for example, for every unit that you manufacture, you are allowed to incur a material cost of 10 rupees, right? This is a standard that is being set. This standard, you compare it with actual and make sure that your material cost does not exceed 10 rupees. Now, this system or whatever you're doing, this procedure is called as cost control. You are trying to control the cost. Are you clear with this? Focuses on maintaining the cost as per the set standards. It aims to achieve the lowest cost under the current conditions. And the emphasis is on past and present. Sir, what is past and present? Based on the past experience, you set the standard and this you compare it to the actuals incurred in the present. And it is a preventive function. Why do you do it? You try to keep the cost in check. You make sure that the actual does not exceed the standard. And once your target is achieved, that's about it. This cost control mechanism is stopped for the year. Here with this, guys. So then what is the meaning of cost reduction? Cost reduction is different. Now, here, based on our past experience, we fixed that for every unit, you are allowed to incur a material cost of 10 rupees. Now, when a company is following a cost reduction program, first they will go and challenge, why did you fix 10 rupees, right? Maybe let us look at some innovative measures to make sure that this material cost is less than 10 rupees. First to go and challenge the standard itself. Why is it 10 rupees? Maybe we will come up with certain innovative technology to make sure that the material consumption required is slightly less, so that the material cost will be less. Look at this. It focuses on reducing the cost by challenging the existing standards. Here, you don't compare your actuals with standards or standards with actuals. No, standard is fixed. You go and challenge the standard itself. Let us look at some other ways of improving and controlling the cost, reducing the cost beyond what is being set in the standards. It believes that no condition is permanent and looks for better ways to reduce it. Maybe this year you have reduced your cost. Maybe the next year further try to reduce it. Maybe is there further technological upgrade where I can reduce it further? Are you clear with this? The emphasis is on present and future, obviously. So right now you have fixed a standard at 10. Let me just go and extrapolate the possibility of further challenging the standard and reducing it further. It's on present and future. So I'm having a more futuristic outlook. Maybe if not today, I'm not able to reduce the cost. Let us look at ways of doing it in future. It is a corrective function. It works even if cost control is already in place. Yes, cost control is what? I have set the standard, compare it with actual. Maybe parallelly, I can also do a cost reduction exercise. Maybe if not today, in future, let me see if there is a scope for reducing the standard cost itself to maybe instead of 10, maybe it can be 9. So let me look at ways in which I can do it. So it is a corrective function. Maybe the past year, it didn't work out. The next year, let me try to maybe make it to something less than the standard already fixed. And it's a continuous process. It's not like once the standard is achieved, it's done. No. Maybe if you are further reducing, once again, you will challenge, and in future, maybe you will try to reduce it. Are you clear with this, guys? This is one of the most important theory questions in this particular chapter. your introduction to cost and management accounting. Here with this, guys, some 5 points are given. So I have condensed it and neatly put it in this tabular form. Now 5 marks in your pocket in case this question comes in, cost control versus cost reduction. Based on the conceptual knowledge that I have told you right now, you can put it in your own words and give some 4 or 5 points depending on the weightage it carries. As simple as that. Now let's move on to the next one. Okay. Relationship between your cost accounting and management accounting. Guys, understand broadly, I'll tell you. So if you have already attended my lecture, I would have given a chapter called as basic concepts, where I would have explained that our subject broadly has 3 objectives. One is stock valuation and profit computation. Then you have something called as decision making. Then you have something called as control, right? Broadly. In theory, they have split this into further selling price fixation and all that. What it is, I will tell you. Now, for all practical purposes, our subject has 3 broad objectives. Now, this objective of stock valuation and profit computation comes under cost accounting. And these 2 objectives, decision making and control, comes under management accounting, right? Now, depending all the chapters in our syllabus, right? Certain chapter go on to achieve the first objective, stock valuation, profit computation. For example, your cost sheet chapter, your cost accounting system chapter. These chapters go on to achieve the objective of valuing your stock and arriving at a profit. Whereas your decision making control, this is achieved in chapters like marginal costing. This chapter goes on to do your decision making. Your standard costing, that helps in control. Budgeting, this chapter also helps you in both decision making as well as control, and so on. Clear with this, guys? So overall, cost accounting revolves around stock valuation and profit computation. Management accounting revolves around decision making and control. Have this in your mind. Once you have this in your mind, any kind of theory question in this area you can attempt. Now you can put it in your own language. Look at this. Now, cost accounting nature, it records only quantitative aspects, whereas management accounting, it records both quantitative as well as qualitative aspects. What are they meaning here? When it comes to management accounting, some decision making criteria is there. So even the non-cost, non-monetary aspects will be considered. Theoretically, it's not just about the figures. You also need to, you're going to take some decisions, even other market forces and other decisions, other aspects need to be considered. Next objective, cost accounting focuses on recording the cost of producing goods and services. Stock valuation, profit computation is what the objective, whereas this one, management accounting, it provides information to management for planning and coordination, decision making and control. That's about it. So area, so cost accounting is limited to cost ascertainment, whereas management accounting, it has a broader scope. It includes financial accounting, budgeting, taxation, strategic planning. Basically, when you're preparing a budget, in decision making or maybe in your control, this area, generally the scope is larger. You consider certain other parameters, your financial parameters as well. That is what is being mentioned here. So recording of data, your cost accounting, it uses past and the present figures, whereas management accounting, it might use even future projections and forecasting. Example, in budgeting, we use future data, guys, correct? Whereas in case of cost accounting, it records your past data, right, as well as your present data. Basically, what we use here is what the figures or whatever is the data that you have already incurred, or historical data is what we generally use here. And of course, this cost accounting, it evolved during industrial revolution. Management accounting, it evolves due to needs of modern business for strategic decision making. Basically, this is more to do with the history of how costing evolved. Costing came long back during the industrial revolution, whereas this management accounting came relatively recent. Right? And of course, when you're doing cost accounting, remember, you need to follow some specific principles and procedure. For example, how do you do absorption, right? So you need to arrive at the predetermined rate and multiply it with the actual base quantity consumed and charge it to the products. So this is contained in cost accounting standards. Whereas in case of management accounting, you can't come up with rules of decision making. Depending on the scenario, the decision will change. So it is not bound by any rules. It is literally flexible and decision oriented. Now guys, for you to attempt this, some 6 points are given here. Now for you to attempt this, if you have the background knowledge of what are the objectives cost accounting achieves and what are the objectives your management accounting achieves, now if you have this in your mind, any kind of this kind of theory question, you can attempt it and write it in your own language. Just one time you read this and go to the exam. In case this question comes, you can put it in your own language and you can score it. As simple as that, right? Now let's move on to the next one. Difference between financial accounting and cost accounting. Quickly we will do. Here financial accounting deals with your financial performance, whereas this one deals with ascertaining cost control, decision making, etc. So your financial accounting records, classifies, interprets the transactions in money, whereas this one, cost accounting, is more to do with your stock valuation and profit computation. Also here they are also taking decision making, control and all. Here basically what they are doing is cost accounting, they are actually considering it as cost and management accounting, basically the subject, right? So your financial accounting deals only with historical data, whereas cost accounting deals with both historical as well as predetermined data. Why? Your absorption is based on predetermined rate, right? Standard data, right? And of course is your financial accounting is used by external users. This is purely for internal purposes only, right? And of course your analysis of cost and profit. So your financial accounts, it shows the overall profit and loss. At times even segment analysis is being done, segment reporting is being done. Whereas in case of costing, we do a detailed cost data for each cost object. What do you mean by a cost object? So the object for which I'm computing a cost, it could be a batch, it could be a job, it could be a unit, it could be a department, could be anything, right? And generally in your financial accounts, you do it for annual data. Whereas in case of costing, there is no specific thing that you need to do it for 1 year. Period is something that you can fix. You can even collect the cost for 1 week, prepare a cost sheet. Weekly cost sheets can be done monthly, it can be done annually. So reports are prepared as and when needed. It depends on how you want it. And of course, when it comes to presentation in your financial accounts, you have Schedule 3 of Companies Act. In that format only you need to give. Whereas in costing, there is no fixed format. For cost sheet itself, there is no fixed hard and fast rule. This is how it needs to be done. Of course, our CA Institute, it is given one format of cost sheet for our syllabus. It is not like all companies need to follow it, right? If you look at CMA Institute, they have followed some other format. Clear with this, guys? There is no specific format here. Are you all able to understand? Now, financial accounting, cost accounting, you can just put it in your own language as long as you are able to understand what it stands for, right? That's about this segment. The next one, the role of cost and management accounting. Why do you need this? Number one, decision making. I just now told you, for the purpose of decision making. For example, marginal costing you have, right? Now let me take one real life example as well here quickly so that you can recollect this point. Simple. Now, if I fix my selling price at 10 rupees, let us say I will be able to sell 10,000 units. Suppose I reduce my selling price to 9 rupees, I will be able to sell more. Obviously, the law of your demand and supply economics, lesser the selling price, more will be the demand. Let's say I'll be able to sell 12,000 units. Now, should I fix my selling price at 10 and sell 10,000 units, or should I fix my selling price at 9 and sell 12,000 units? It depends. What we need to do for every alternative, you need to prepare an income statement and go for that alternative that gives you the maximum amount of profit, right? Now, you are choosing between multiple alternatives. This is an example of decision making. Next one, business planning and control. Of course, in your standard costing, what do? You set your standards, compare it with the actuals. Now you analyze the variance. If it is a favorable variance, which means the particular person has done a very good job, you will reward him. In case it is a adverse variance, then you will go and punish him. Punish could be ideally penalizing him or taking a salary cut or depromoting or maybe dismiss the employee, whatever it is. So it helps you in your business planning and control. And of course, the other one is your cost allocation. Basically your stock valuation and profit computation. And also look at this, it helps in allocating cost of products and inventories for both internal and external users. Look at this, stock is valued only in our subject. So in financial accounts, stock is not getting valued. Only in cost accounts, stock gets valued. Clear with this, guys? Note, while cost accounting focuses on cost accumulation allocation, management accounting is broader and focuses on decision-making support. I told you, cost accounting significantly deals with your stock valuation, profit computation, whereas your management accounting deals with decision-making and control functions, right? This is another important theory area. Next one is essentials of a good cost accounting system. Ideally, what are the things that a cost accounting system, a good cost accounting system should have? This was, I think, once a past exam question. Simple, guys. Now, I have neatly classified this and put it as point-wise in your institute study material. They have put it in paragraph format. Here, I put it in a tabular format. It's slightly easier. Simple. Number one, A good cost accounting system should be informative and simple, right? Based on your industries, based on your company's requirement, make sure that your cost accounting system gives you information and it is easy and simple. Number two, it has to be accurate and authentic. Obviously, the figures should be correct. There should not be any discrepancies or differences and should be authentic, which means any inaccurate data should not enter into your cost accounting system. Then uniformity and consistency should also be maintained. 1 year, I can't take the base quantity for absorption rate as machine hours. Next year, I can't take it as labor hours. No, uniformity should be maintained. Number four, it has to be integrated and inclusive. Means what? Your costing data should be integrated with all your business processes so that wherever possible, you need to collect the information properly recorded in your financials, in basically your costing records. Clear with this, guys? Next one. Flexible and adaptive. Obviously, if there is some kind of changes in technology, obviously this needs to be, your cost accounting system should be able to adapt to it, and automatically you need to be able to update it. And of course, not just that, suppose there is a change in your legal requirements, regulations, your cost accounting system should be able to adapt to it and make sure that you are complying with your legal requirements. And there has to be a trust on the system. The management must have the confidence in the system and actively support its development. Reliable information leads to better decision making. Simple. So what could be a question in this area? What are the essentials of a good cost accounting system? That's about it. These are certain points which you can just write in your own language. Now, once you just give it a look, quickly you just give it one look, and in your example, some 4 or 5 points, depending on the marks, you can just write it and close off. Suppose if you have a better point also, you can add, nothing problem at all, no problem at all. Then let's go on to another one. It was a past exam question. Yes, look at this. What are the benefits of digital costing system? So what are the benefits of digital costing system? What do you mean by digital costing system? Simple. Instead of maintaining costing records, right, all the ledgers in a physical format, manual format, digitize it. Maintain everything in an ERP solution or maintain everything in a software format. Now, if you are using a digital costing system, what happens? Number one, the benefit is what? Accurate cost ascertainment. Obviously, when you are using machines, so cost is automatically collected and entered accurately. So you need not manually do things. So since you are not doing, since there is no manual intervention, in that case, accuracy is well maintained. Number two, time-based activity analysis. What are they mentioning here? Tracks the time per activity to design incentive plans and improve work efficiency. So now each and every employee, what is the time they are spending? Based on that, whether they are spending more time or less time, whether they are being, whether they are being efficient or inefficient, all these things can be tracked, and accordingly you can exercise control, you can penalize, or you can maybe reward them. Then material planning and zero wastage. Yes, so since it collects all the information, now what you can do is you can plan your inventory ahead, right, and make sure that you are not holding some stock, dead stock, non-moving stock is not being held, so that if you keep holding the stock, automatically what happens is that it will end up as a waste, obsolescence will happen. So your system will trigger what are all the non-moving stock, dead stock, so you can automatically make sure that you are disposing it off, or maybe give a discount and clearance. You can do a stock clearance and all these things. Material planning and zero wastage. Look at what are the points that you can write. Since I'm giving you these examples, in your mind, you can just frame your sentence and write it in a way in which you put it in your own language. That's about it. Elimination of non-value added activities. So obviously, when you're maintaining a costing system in a digitized format, you can know what are all the activities the company is actually having. Out of that, you can make sure if there is any non-value added activity, which means an activity which you are actually doing currently, but it does not add value to the product, you can remove it off. Make sure that only you are having core activities. Any non-value added activities you can remove. If you remove non-value added activity, automatically the cost relating to that non-value added activity can be saved. Clear with this, guys? Next one, the standard setting and variance analysis. So since we are using real-time data to set standards, right, on a real-time basis, you know, okay, this activity is done. Immediately at the end of the activity, you know how much is the cost you should have incurred, how much the cost you have actually incurred. Based on this, you can generate a variance analysis. Then your market-based cost estimation. Now, it uses current market prices of raw material and consumables to estimate the cost and set standards on mark-to-market basis. Let us say I am in the business of let us say I'm BPCL, I'm in the business of distributing fuel, right? Petrol, diesel and all. Now, if I am having an ERP based cost accounting system, now what happens? Suddenly the government increases or decreases the petrol price on a real-time basis in my costing system. I can bring up this particular rate, and accordingly I can fix my standards, and accordingly I can price my products. Are you clear with this? So market-based cost estimation. Next one, demand prediction and budgeting. So it uses customer data to predict the demand, right, aiding in budget preparation and production planning. So based on, so since even the sales are happening in this software only, what you can do is, okay, so now this product I am dealing in, let us say some 10 products or 12 products, which product is more moving, accordingly you can understand, okay, for the next period this is the demand prediction. Okay, so for product A the demand will be more, maybe for certain other products the demand will be less. You will be able to predict the demand very well. And improved cost benefit analysis. So it enhances the understanding of cost behavior, improving decision making through accurate cost benefit analysis. Since all the data is available, if you want to take any decision, if I take a decision, what is the cost, what is the benefit? So you can, on a real-time basis, you can arrive at cost benefit analysis based on which you can take decisions. Are you clear with this, guys? All these are very logical. So should I exactly write these words, sir? Go through it once, put it in your own language. As simple as that, guys. Beyond this, nothing great is there, right? Next one. Okay, this is once again a repeated exam area. Cost object. Now, what do you mean by cost object? Cost object means the object for which I am computing the cost. Sir, what is the meaning of that? Can you give an example? Yes. Let us say I am saying 20 rupees. You'll say 20 rupees for what? Sir, 20 rupees. Sir, 20 rupees for what, sir? I am saying 20 rupees per pen, which means for me to manufacture one pen, the cost is 20 rupees, correct? Always remember, cost cannot stand alone. It needs to stand along with a cost object. If I just say 20 rupees, it doesn't make any sense. I will say 20 rupees per pen, or 10 rupees per hour, or 5 rupees per unit, as the case may be. So for what are you computing the cost is called as a cost object. Are you clear with this? Now, the cost object can be a product, right? So, sir, I am collecting the cost for a pen, sir. So, per unit of pen is the cost object. Sir, no, sir, I am trying to compute the cost for a particular branch, right? In this case, whatever cost incurred in the branch. So, the branch is the cost object. You go and collect all the costs incurred in that particular branch. So, for what are you computing the cost is called as a cost object. Now, look at this. Examples of cost objects. So, it could be a product. Smartphone, tablet, computer, SUV car, whatever it is. It could be a service, right? In case of a hotel, you have what? So per room day, correct? In case of your transportation, passenger transportation, per passenger per kilometer, guys, correct? In case of hospitals, per bed per day, right? It could be service. In case of project, okay, sir, for Chennai Metro Rail project, what is the total cost? I'm collecting the cost. So, Metro Rail project or road project, whatever it is, right? For activities, maybe, sir, inspection of material, that is one activity, sir. For this activity, what is the total cost? We popularly call it as cost pool and all, right? So, for a process, so for process 1, what is the total cost? Process 2, what is the total cost? So, for whatever you are computing the cost, that is called as a cost object. You can calculate cost for department also. Sir, I want to calculate department wise, what is the cost, sir? Okay, production department, so and so is the cost. Finance department, so and so is the cost. Here, production department becomes the cost object. Your sales department becomes the cost object. So, for what you are computing the cost is actually called as a cost object. Clear with this, guys? Now, look at this. Now, you need to know certain things, something called as a cost unit. A cost unit is basically a unit of a product or a service or a time or combination of any of these to be asserted in relation to which the costs are ascertained or expressed. In this case, I told you. So, let's say I'm a steel manufacturer. Here, I'm calculating the cost per ton of a steel. Here, the unit of measure is what? Ton. So, ton is actually your cost unit. Clear with this, right? So, for example, you are calculating the cost per kilometer. Kilometer is going to be the cost object. Guys, are you all clear with this? So, let's say I'm undertaking a particular contract. Here, a contract or an order or a job becomes one cost unit. Are you clear with this? So, basically, your unit or the object for which you compute the cost is what needs to be determined here. Now, it could be a number, it could be a weight, it could be area, square feet, right? Sir, what is the cost of construction per square feet? It could be volume, it could be length, it could be any unit of measure depending on the industry where you're operating. And generally, guys, in exam, this is what they asked. They ask you, okay, they will mention the industry and they will ask you what is going to be the cost object or the cost unit for that particular industry. For example, automobile, what is the cost unit? One car or one bus, correct? A number is a cost object. Cement industry, it could be, you can calculate the cost per ton or per bag. So here you can write per ton or per bag. Chemicals, generally chemicals could be in what? It could also be in liters, it could be in gallon, it could be in kgs also, whatever it is. The unit of measure could be anything. Power, generally we calculate it as per kilowatt hour, right? Steel could be in tons. Transport, it could be passenger kilometer, ton kilometer, anything. Gas, generally gas is computed in cubic feet. In a place I actually store the gas, right? So the unit of measure, the manner of computing is the cost per cubic feet, right? Some people even calculate it per kg and all. Right, guys, are you clear with this? So depending on the industry, right, you can have different cost units. Generally in exam, this is what they ask. This is once again a popular exam area. Simple, they might list out any 4 or 5 industries. You just need to write what can be the unit of measure. Logically think and write, guys. That's about it, right? That's about this particular area. Now, the most important thing in this particular segment, in this particular theory chapter, basically your introduction to costing, is this concept called as responsibility center. What do you mean by responsibility center? Now, guys, in a particular company, right? Now, there are different departments. There could be branches, there could be your subsidiaries, there could be many places where activities are happening. Any kind of activity, production activity, sales activity, anything will be happening, correct? Now, for each of these, I call each of these are called as centers, and for each of the center, I fix them some responsibility, right? Broadly, there are 4 types of responsibility center. What are the 4 types of responsibility center? Cost center, revenue center, profit center, and investment center. Broadly, these 4 are the responsibility center: cost, revenue, profit, and investment center. What do you mean by a cost center? Cost center is basically, it could be ideally a department or anything, right? It is basically a center which is responsible only for incurring cost. It will not generate any revenue, it will not book any profit. It was responsible only for incurring the cost. Example, sir, an example of a cost center is production department. Sir, in a production department, what is the responsibility for a production department? It is only to incur cost. Does it generate any revenue? No. Sir, then revenue center, sir, the responsibility of a revenue center is only to generate revenue. Generally in revenue center, cost is not incurred. Example, sales department. Clear with this, right? Then profit center, sir. These are centers where both cost as well as your revenue is generated. Centers responsible for generating revenue and incurring cost is called as a profit center. Can you give an example, sir? The example here is going to be a branch office. Example here is going to be branch office. Now let us say I open a branch in Hyderabad, right? That branch is responsible for both incurring cost. There you need to pay rent, you need to produce products and all that, as well as there only you will sell it also. So obviously sales minus cost gives you profit. Since you are responsible for both the revenue as well as cost, this center is called as a profit center. Are you clear with this? So then investment center, sir, investment center. Now this particular investment center is responsible not only for profit, but it is also responsible for bringing in the investment. Sir, example, subsidiary company. Example, subsidiary company. Let us say I am Tata Sons, right? Now Tata Sons, it has one subsidiary called as Tata Motors Limited. It is a separate company by itself. The holding company is Tata Sons. So it holds stock, it holds stake in Tata Motors, right? Now Tata Motors, what will they do? They need to bring in their own investment. It is a separate legal entity. So it will go for IPO or promoters will be there. They will bring in funds. Investment is also its own responsibility. Plus they will incur cost. They will also generate revenue. So they are also responsible for profit. So they are responsible for both investment as well as profit. This is called as investment center. Clear with this, guys? So responsibility centers, now you read it, now you'll understand. So look at this, these departments or individuals or whatever it is, could be a branch or your subsidiary, these are called as responsibility center, and they are accountable for their performance in the specific area. What are the specific area? It could either be cost or it could be revenue. If it is both cost and revenue, I call it as a profit center. If it is both profit as well as investment, I call it as an investment center. So there are 4 different types of responsibility centers. Now that you've understood this concept, put it in your own language. This is actually a very, very popular theory exam question. Right, guys? Clear with this? Now, in this cost center, the first one that we saw, no? Further, there are 2 types of cost centers. The other ones are fine. In cost center, what do you mean by a cost center? It is that responsibility center which is responsible only for incurring cost. You don't generate any revenue. There are 2 types of cost centers. One is a standard cost center. The other one is called as a discretionary cost center. Sir, what is the difference between the two? What do you mean by a standard cost center and what do you mean by a discretionary cost center? In case of a standard cost center, the output is measurable. That is, there is an input-output ratio that can be defined. Costs are compared with the standard cost and the variance are classified into controllable and uncontrollable. Sir, I don't understand a word. Can you give an example? Simple, guys. Now, let us say I am a car manufacturer. To produce one car, right? Let us say I need to fit 6 doors. Correct? I need to fit 6 doors. 4 doors plus 1 bonnet and 1 dicky. 6 doors are there. Correct? And per door, let us say, for example, per door, the cost will be rupees 5,000. So 5 into 6, for every car, I know that the door cost alone will be 30,000 rupees. I have an input-output ratio. One car requires 6 doors. 1 door cost is 5,000. 6 doors cost is 30,000. For every car, the door cost itself is going to be 30,000 rupees. As simple as that. Now, this is a standard. I compare this with actual. Actual could be 28,000 or it could be 33,000. Above or below the standard. Based on this, I arrive at the variance. Are you clear with this, guys? I will be able to exactly know, sir, to produce one car, exactly the cost is 30,000. This is how you must be incurring. So now, if I am able to arrive at this input-output ratio, for one output, that is car, I need 6 doors input-output ratio. If you're able to establish this relationship, this kind of cost center is called as a standard cost center. Typically, an example is production department. In a production department, you can clearly know, okay, sir, for me to produce 1 unit of FG, I need so-and-so kgs of raw material, so-and-so hours of labor, and so on. You will be able to establish an input-output relationship. Whereas, in case of discretionary cost center, output cannot be measured in monetary terms as there is no clear input-output ratio. Example, R&D department. Let us say, Maruti Suzuki has one department, R&D department. Now, R&D department, some scientists will be sitting there or some industry leaders or experts will be sitting there. They will try to come up with an innovative technology. Let us say they are trying to manufacture a car that runs on salt water, right? So now they are actually doing a research. It is not directly being produced now. They are trying to extrapolate. They are doing, it has a lab. They are trying to test and all these things. Now here, I can't come up with a particular standard saying, okay, so for me to conduct this research, this will be the cost. No, you can't say the output is, so the output coming from this particular R&D department is so and so, there will not be any output only, right? It cannot be measured in monetary terms, clear? But still it is a cost center. They don't generate revenue, but I incur cost, the scientist's salary and all I need to pay. Guys, clear with this, guys? In this case, now this type of cost center is called as discretionary cost center, right? Here, output is not directly measurable. Whereas in case of standard cost center, output is measurable. You have an input-output ratio. What is the cost you should have incurred? Standard can be compared with the actuals. Are you clear with this? Whereas in case of discretionary cost center, I can't establish a standard because there is no input-output ratio. Are you clear with this, guys? Max, what you can do? You can fix an overall budget. Sir, for this R&D department, I have so-and-so budget, right? If it exceeds or if it is below that, maximum I can say, sir, this is the difference, variance, sir. reasons you can't analyze much because it is not quantitative in nature. Clear with this, guys? So overall, under responsibility center, 4 types of responsibility center: cost center, revenue center, profit center, investment center. And under cost center, you have standard cost center and discretionary cost center. Are you clear with this, guys? So this is one more theory exam question. So as organization expands, its function, structure and operations become more complex. To manage these complexities, the management delegates the authority and responsibility to various departments or individuals or branches, and these are called as responsibility center. If I'm responsible only for incurring cost, it is called as a cost center. Responsible only for generating revenue, it's called a revenue center. Responsible for cost and revenue, a profit center. An example, and if I'm responsible for bringing in the money, capital, plus you're generating profits, that's called as an investment center. We saw an example: cost center example is production department, revenue center example is sales department, profit center example is a branch, your investment center example is a subsidiary. Here with this, guys, right? And I think that's the most important aspect of theory in this particular chapter. Predominantly certain important aspects. Okay, one more thing we have here. Okay, this alone, yes, this is also one more important thing: classification of costs on the basis of controllability. This is another important theory concept that generally gets tested. Now, based on the nature of controllability, costs can be classified as either controllable costs or uncontrollable costs. Cost can be classified as controllable or uncontrollable costs. Sir, what is the difference between controllable cost and uncontrollable cost? I will tell you. Now, guys, let us say, right, recall there is a material price variance we would have done, right? So your material price variance, so the formula is going to be what? Standard price minus actual price into actual quantity, right? Now, standard price, let us say for every unit of raw material purchased, you should have incurred only 10 rupees, right? But what happened? Actual price, you have actually incurred, let us say 13 rupees for every kg. And in this year, you have actually purchased, let us say 10,000 kgs of raw material. Now, overall, you tell me, guys, so what is going to be my material price variance? For every kg purchased, I paid 3 rupees more. Like that, I've purchased 10,000 kgs. So it's going to be how much? 3 into 10,000. 30,000 rupees adverse is going to be your material price variance. Correct, guys? Now, what we do is, okay, so this 30,000 rupees is what is being incurred more. Now, what happens? I will go and fix the responsibility to whom? The purchase manager. He is responsible for the price decision. Now, what happens? This purchase manager says, sir, when you fix the standard, right? We fixed the standard price for every kg. You asked me to purchase only at 10 rupees, right? Now, what happened after the standards were fixed using the budgeted data? Sir, this year genuinely there was an inflation. What happened was 10 rupees. What was 10 rupees at the time of fixing the standard? Market right now, sir, it became 11 rupees. It became 11 rupees right now. Genuinely, sir, because of the market forces, there is an increase in the cost per kg by 1 rupee, right? Now, this guy has paid how much more? 3 rupees more. Out of this 3 rupees, right, 1 rupee per kg was genuinely because of the market level changes. It was genuinely because of price level changes, inflation in the market. The balance 2 rupees is because of the inefficiency of the purchase manager to negotiate. Now, in this case, what we will do? So 1 rupee into how many kgs? 10,000 kgs. 10,000 rupees, right, is attributable to genuine inflation, whereas 2 into 10,000, 20,000 rupees is due to the inefficiency of our purchase manager. This 10,000 rupees is an uncontrollable cost. Why? No one can control this, sir. Genuinely in the market, there was actually an inflation that happened, because of which this particular cost is actually incurable extra. So I can't do anything about that. Whereas this 20,000 rupees, it was controllable. This could have been avoided. This is a controllable cost. In future, I can make sure that this 20,000 rupees need not be incurred extra. Are you clear with this? So basically, this is the difference between your controllable and uncontrollable cost. The cost that can be controlled, that is within the purview of the management to actually avoid, is called as controllable cost, whereas uncontrollable costs are beyond the purview or control of the management. Are you clear with this? Keeping this in mind, you can just read this and you will understand everything. Now look at this. Controllable costs that can be influenced or regulated by the manager of a cost, profit, or investment center. These are costs incurred within the responsibility center and can be controlled by the manager, right? They have given all these things, direct labor, material costs, and all these things, provided what it is within the control of the management, right? Now, uncontrollable costs, this cannot be influenced by the actions of the specific individuals or manager. These costs are outside the control of the specific person of the organization, right? So example, tool room expenses are controllable by the tool room foreman, but the share of those costs apportioned to the machine shop is not controllable by the by the machine shop foreman. Within the organization also, I'm telling you. Now, let us say there is department A, right? There are certain costs incurred exclusively by this department, right? These costs are controllable by this department, right? Whereas there are some common costs, like for example, factory rent, common rent being apportioned to this particular department. From the perspective of this department, this is an uncontrollable cost. I don't know how much share of factory rent I will be getting, right? Even if I get something, I don't have a say over it. From the perspective of the department, this cost is uncontrollable. Clear with this, guys, right? Or you can take that other example that I told you, material price variance, right? Out of the 3 rupees of variance, 2 rupees was within the control of this particular company, the purchase manager, whereas this 1 rupee was genuinely due to inflation. So that is an uncontrollable cost. Clear with this, guys? So predominantly, these are all the most important theoretical areas of this particular chapter, right? Basically, your first chapter of the study material, introduction to your cost and management accounting. So now let's move on to certain other chapters. So certain important theory areas I have handpicked. We will be discussing those areas as well. But most importantly, the first chapter, generally, for sure, it comes at least 1 5-mark question comes from this area. So I just wanted to make sure that we are covering this first chapter of first theory chapter in an extensive manner, so that it gives a very good coverage, and short you can definitely attempt one theory question. Right now, let's move on to the theory questions in certain other chapters which I have handpicked. Now, moving on to the next chapter, in budgeting chapter, right? There is one important theory concept here, theory area, called as zero-based budgeting. So this is on page number 177 of our concept decoder book. Now, zero-based budgeting, what do you mean by this? Now, guys, generally, how do we prepare a budget? Previous year data is available. Let us say previous year, the sales figure was 1 lakh rupees. In the next year, I expect the sales to increase by 10%. Next year sales. So the budgeted sales for the next year will be 1 lakh into 110%, right? It is going to be 1.1 lakh. Similarly, for all the components of cost, I will arrive at the base figure, the previous year data. On that, I will increment it based on the increase or decrease I am expecting. This is how generally budgets are prepared, right? But in case of zero-based budgeting, I assume the base to be zero. That is what? You don't take the previous year data and increment it or decrease it based on your expectation. No, you start from the scratch, right? Assume that the company is now being started. In that case, what will you do? You don't have a base on which you can rely. So what you need to do is, you need to arrive at every element of cost or maybe revenue, everything you need to arrive at it. So what are all the activities that are going to be involved in my organization? You list it down. Every activity. Let us say the total purchase cost for me in the next year is going to be, example, I'm telling you, rupees 80 lakh. Now, directly you can't just mention 80 lakh. You need to go on and justify. Why is it going to be 80 lakh? Sir, I'm going to produce so and so units, but I already have an opening stock of so much. I am planning to keep a closing stock of so much. Based on this, I need to adjust for stocks and purchase so and so kgs of raw material. Every kg of raw material, this is the cost. Like this, every single line item, you need to justify and arrive at the figure. This is called as zero-based budgeting. There is no base on which you can increment line item wise. You need to justify and arrive at the budget. Are you clear with this? Now you read it, you will understand. Zero-based budgeting, ZBB, requires that each element of cost is to be justified even if the activity is not new. Without proper justification, the budget allowance is zero. You don't give any allowance. How is this different from traditional budgeting? Unlike the traditional budgeting that starts with the historical data or previous year figures, zero-based budgeting starts with an assumption that the budget is zero and each activity needs to justify its cost. Are you clear with this, guys? Right? So how do you do this? Zero-based budgeting focuses on activity-based budgeting. That is, you list out the activities where each activity is justified by its cost-benefit analysis. Activities are evaluated and prioritized based on alignment with the organizational objectives, fund availability, and regulatory requirement. Right? And who uses zero-based budgeting? It is used for both corporate as well as non-corporate entities. Non-corporate entities like government, it helps to justify the expenses incurred on social program. For corporate entities, it is ideal for discretionary costs. We saw no discretionary cost center. Example is your R&D activities and all this training activities, advertising activities. For these kind of discretionary cost centers, zero-based budgeting or maybe your cost activity-based budgeting, which is a model on zero-based budgeting, is very much important, right? So what are the stages involved here? Number one, you identify and describe the decision packages. Decision packages is basically your activities. First, identify what are all the activities you need. Number two, evaluate every single activity. Sir, whether I need this activity or not, let me evaluate it. And number three, sir, these are the list of activities I need. Rank them, prioritize based on the order of importance. And finally, you allocate them resources. Okay, so this is the amount that you can spend maximum for every single activity. Are you clear with this, guys? With this background, any other question in this area, you can write advantages, disadvantages, and all these things. Advantages will be what? More accurate. It is not directly based on past year plus adding something. No. But the limitation would be on the flip side. The major limitation here is it is a time consuming process. You need resourced skill set to actually come up with zero-based budgeting and all that. Now, with this background, just go through all other things, advantages, limitations, and that's about it. You will be completing this area. Guys, it's very simple. That's what I'm telling you. Play it smart. When you're doing theory, don't omit anything, but don't try to cover everything also. How do you do? Play it smart. Know the concept, certain core theory areas, learn the concept. Based on this, you just give all these theory segment one reading, and that's about it. You will be able to handle it in the exam. So in the exam, even if it comes, it is not like you don't know anything. You can at least attempt and write something that you know, and that's about it, guys. Clear with this. Then one more important theory area in this chapter is there. I think I saw this difference between your flexible and static budget, if I'm not wrong. Yes. Difference between fixed budget and flexible budget. Fixed is also known as static. What do you mean by a fixed budget and a flexible budget? Simple. Now, you have a fixed budget, you have a flexible budget. What do you mean by this? Let us say I budgeted to produce 10,000 units, right? So to produce 10,000 units, how much is the material cost I budgeted? How much is the labor cost I budgeted? How much is the variable overheads I budgeted? How much is the fixed overheads I budgeted, right? Now, for one activity level, I have prepared one budget. So a budget prepared for a single activity level is called as a fixed budget. Now, what do you mean by a flexible budget? Now, based on this fixed budget, what will I do? So I will arrive at what are all the variable components. Let's say material, labor, variable overheads. Now, these are all the variable costs. Variable costs will remain constant on a per unit level. Fixed cost will remain constant in total based on the fixed budget. Now, let us say I'm preparing a budget for different output levels. For 5,000 units, how much will be the cost? For 10,000, for let's say 20,000 units, how much will be the cost? For 1 lakh units, how much will be the cost? So based on the data that you are derived from the fixed budget, if you are able to prepare a budget for different output levels, it is called as a flexible budget. Simple. This is all it is. How do you prepare a flexible budget? Simple. Using the fixed budget, find out which are all the variable costs, which are all the fixed costs. Fixed costs will remain constant on a per unit level. Your variable cost will remain constant on a per unit level. Fixed cost remains constant in total. Based on this, you prepare your budgeted data for any other volume level, different volume levels, it's called as a flexible budget. As simple as that, guys. So now just go and look at it here. Fixed budget does not change with the actual volume level achieved. Let us say I prepared a budget for 10,000 units, but actually I ended up producing actual data is 20,000 units. Now I can't compare this 10,000 unit level budget with an actual performance of actual output of 20,000 units. No, I need to flex the budget to 20,000 units. You have actually produced how many units? 20,000 units. So now for you to produce 20,000 units, what is the cost you should have incurred? Compare that with the actual cost incurred for 20,000 units, which means definitely you need to prepare a flexible budget for the actual output level, right? Using fixed budget directly, it is not comparable. Whereas here, flexible budget, look at this, it can be recast, right? You can flex it based on the actual activity level. It is not rigid, right? Level of activity. So fixed budget, you prepare only for one activity level. Flexible budget, for various activity levels you can prepare. Variance analysis is less useful in case of fixed. Why? You can't compare 10,000 unit output level with a 20,000 unit actual data, right? Whereas if you're preparing a flexible budget, it is very useful for variance analysis. As simple as that, guys, right? Look at this. Look at this. Cost behavior pattern is analyzed. Fixed, variable, semi-variable, and all I told you, right? Activity level. If actual and budgeted level differs, the cost and price fixation may be inaccurate. Whereas in this case, obviously it facilitates accurate cost ascertainment, price fixation, and quotations and all at different activity levels. Why? Because for different activity levels, I can prepare a budget. As simple as that. Comparison with actual, of course, if you are following a fixed budget, it is meaningless. Why? You can't compare a 10,000 units budget data with a 20,000 units actual data. Whereas if you are preparing a flexible budget, it provides a meaningful comparison. Why? Based on the actuals, you can prepare, okay, so what is the budget for the actual output level? I'll be able to prepare a flexible budget, and that can be compared with the actual. Here with this, guys, right? So these two are some important concepts: zero-based budgeting as well as this one, your fixed and flexible budget. The difference. This is a very popular exam question in this area. Sir, will it come only from this, sir? No, I'm not saying this, but these two are popular exam questions from this chapter. The other areas, guys, I'll tell you quickly. One look, you just brush up here. Look at this. I have just neatly presented everything in a tabular format. Very simple. You just go through it once. Don't break your head in mugging up. Just go through it once, and that's about this. That's about this theory segment here. Fine, guys. Now with this, I'm moving on to the next chapter, material cost. There we will be seeing some core important theory areas. In case you are doing this the day before your exam, it's very relevant. The day before your exam, only the important areas I'm doing it here in this particular area. So now let's move on to the next chapter called as material cost, wherein we will be seeing some theoretical concepts. Now in this chapter, material cost, right? So there are a lot of formulas like EOQ, right? You have stock levels like reorder level, minimum level, maximum level. So the logic for all these formulas and everything, I have already discussed it during our the regular batches as well as during our marathon and all of that. Here I'm going to focus more on the theoretical areas that are there in this particular chapter, materials. Now I'm handpicking some two most important areas where theory can generally come from this chapter, right? Now guys, also be aware that at times they also test you on stock levels, right? Some theoretical question can also come like reorder level. So what do you mean by reorder level? Not very simple. So recall that mother example I gave you. So when does your mom pick your phone call to place an order? So at what point of time should you place an order is called as reorder level. When you are placing the order, for how much quantity you place in order, that is called as economic order quantity. So all these things, the practical theory, yes, anyways, while you are doing the subject, while you have learned it conceptually, so you can just write it in your own language. Now let me focus on some core theoretical aspects here. Now the difference between bill of materials and material requisition note. Popularly, bill of materials called as BOM and material requisition note is called as MRN. Right? What is the difference between the two? This is covered in page number 65 of our concept decoder book. Now, simple guys, what do you mean by a bill of material? First, you need to understand what a bill of material stands for and what an MRN stands for. Once you know the difference between the two, you will be able to handle this. Simple guys. First, your bill of material. Now, what is this? Every company has a document called as bill of material, BOM. what will it have? To produce 1 unit of FG, let us say I am a car manufacturer. To produce 1 car, what are all the types of raw material I need in what proportion? For example, to produce 1 car, I need 1 engine, right? Then I need 4 wheels. Then I need 1 steering wheel. Then I need 6 doors, right? 4 doors, 1 dicky, 1 bonnet. Like this, I clearly list out the types of raw material that I need and what is the quantity and all, at what proportion do I need. This document that contains the ingredients as to what are all the different varieties of raw material that you need in what proportion, right, to produce 1 unit of FG is called as bill of material. Are you clear with this? This document, bill of material, has the list of all the ingredients, all the materials required to produce your FG. Whereas your MRN, what do you mean by MRN? Simple. Now, in your factory, there is one area called as stores where raw material is stored. There is an area called as factory shop where the machines are there, and this is the place where the raw material gets converted into FG. Now this factory shop, the head of this factory shop is your production manager. The head of the stores area is your stores manager. Now obviously, to start this production, the production manager requires the raw material to be fed in the machines, right? So obviously he needs the raw material to move from the stores area to the factory shop. So he will actually request for raw material from the stores to factory shop. Now how will he request, right? Will he send one WhatsApp message and say, Macha, he just gives some? No, absolutely not. So what will he do? So this moves by way of a formal document called as a material requisition note. So a material requisition note is a document prepared by the production manager. It is issued to the stores manager, requesting the stores manager to supply the raw material to the factory shop. Are you clear with this, guys? There he will clearly mention, sir, I need, let us say, 20,000 kgs of raw material A, 50,000 kgs of raw material B. So this guy who sends, the production manager sends this to the stores manager. Are you clear with this, guys? This is called as a material requisition note. Whereas a bill of material, it contains, for me to produce 1 unit of FG, what are all the ingredients required? Are you clear with this? These two are ideally completely different. Now, based on this, you read it. Bill of material, it is a document prepared by the engineering or the planning department. Obviously, only these guys know to produce 1 unit of FG, what are all the different types of raw material you need. Whereas MRN, it is prepared by the production or the consuming department, basically the production department. MRN, it is a complete schedule of the component parts or raw material required for a particular job or work order. MRN, it is a document asking the storekeeper to issue the material to the consuming department. Are you now understanding it? Bill of material, it often serves at a purpose of material requisition as it shows the complete schedule of materials required for a particular job. Now what they are saying, look, based on the bill of material, your MRN can be prepared. Correct? No? Because, sir, what are all the different types of raw material I need? You go refer the bill of material. Based on that, you can clearly prepare a material requisition note, ask the store manager or the storekeeper to send it. Are you clear with this? Whereas an MRN, it can never replace a bill of material. Are you all able to understand? Then your bill of material, it can be used for the purpose of quotations. Correct? No? For me to produce 1 unit of FG, how many different types of raw material are needed? Based on this, I can prepare a quotation. MRN, it is useful only for arriving historical cost. Sir, so this year, last year, I made so and so number of requisitions. Every requisition, I ordered so many number of kgs. And what is the cost I can arrive? It can't be used for, you're coming up with quotations. The next one. Your bill of material is, it helps in keeping a quantitative control on the materials drawn through the material requisition. This material requisition note, it shows the material actually drawn. Are you clear with this? So here, using the bill of material, you can have a control. Okay, right, this guy is going to produce 10,000 units of FG. For every unit of FG, you need 2 kgs of raw material A, which means maximum this guy should have requested only for 20,000 kgs of raw material A. Guys, correct? So this data you can derive from bill of materials. But now this guy actually requested for 22,000 kgs of raw material A. How do you know this? Based on MRN. Now with this you can compare the actual data, right, with what is the amount of raw material he should have consumed. Are you clear with this, guys? This is the story of bill of material and material requisition note. Very, very simple. Have the clarity based on this. Some 4-mark or 5-mark exam question comes, you can just build your points in your own words. That's about it, right? So now the next one that I want to tell you, that I want to share with you all is just a minute. Yes, goods received note. What do you mean by a goods received note? Now, obviously, when you place an order from the supplier comes and delivers the goods in your factory, right? Now, you first check the receipts, and your inspection department will check all these raw material, and if they find it as good quality, then what they will do is they will actually take this, accept this raw material, and they will take it inside the stores. Now, before accepting, something called as a GRN, goods received note, is actually prepared. Are you clear with this, guys? This goods received note is actually a document that proves that yes, these goods are good and they are accepted by me. Are you clear with this, guys? So this is prepared when the materials are received in good condition and match with the purchase order. Purchase order is actually the document prepared when the purchase department of our company enters into a contract with the supplier, saying, okay, this guy is agreeing, the supplier is agreeing, I will supply these different types of raw material at these quantities, at these specification. Now, this will have everything what we have agreed, that I will compare with what actually the lorry that comes into my factory. I compare the actuals, and if it is everything is fine, I accept it. And the way of acknowledging the receipt of this goods is by preparing something called as a GRN. Clear with this, guys, right? So now basically I prepare 4 it's a quadruplet, means what? I prepare 4 copies of this GRN. So 4 copies, why, sir? One is sent to purchase department, then I send to the stores, right? Why purchase department? Because they were the ones who initiated the purchase. Stores department, because they are going to store it. Receiving department, that is going to be the department which actually receives or consumes this particular raw material. And the accounting department, basically the costing department. Why? This needs to be recorded in the books, right? So this will give them actually all this document in order to record this particular transaction. What is the purpose? It acts as an official record of accepted goods for inventory and accounts. Clear with this, guys? Now, what do you mean by a material returned note? Simple. Stores is there, factory shop is there, right? Now, when the stores issues the goods to factory shop, right, it is requested by the factory manager, right? The factory manager issues a material requisition note under which the goods will move from stores to the factory shop. Suppose he has completed the job, he still finds that some extra kgs, some excess stock is remaining with him. This factory shop needs to return it back to the stores, right? Now, this excess stock will be returned back using against a document called as material returned note. That's about it, guys. Are you clear with this, right? At times, this material returned note is also used when the supplier, when the stores department is returning it back to the suppliers also. Are you clear with this, guys? The material may be returned to the supplier after being received in the factory. So in this case, you prepare this material return note, or even in some factories, what they do is for internal purpose, from factory shop back to the stores also, they use this material return note. That's about it, guys. That's about it, right? Then there's one more thing that I want to tell you here. Yes. Bin card versus stores ledger. This is also one popular theory question. Now, what do you mean by a bin card and what do you mean by a stores ledger? Now, bin card and stores ledger. Now, what is the difference between the two? Now, guys, basically a bin refers to a place where the raw material is stored. Basically, we call it as a stores area or a bin, right? Now, in this bin, against every bin, it could be a shelf, or it could be a big hall, it could be one big godown, or it could be a small box also, anything. Against this bin, right, this bin card is always attached to it. Now, this bin card is prepared by the stores keeper. Now, what data it will have? Number one, it will have, look at this, it will have the date, obviously. Apart from that, it will have receipts. What is the number of units I am receiving? What is the number of units I am issuing to the production department? And what is the balance available as on date, right? Now, whatever I'm receiving in the stores, this receipt will be supported with a document called as GRN, goods received note. Whatever I am issuing from my stores, this will be supported with a document called as material requisition note we just saw, and whatever is the balance available, I will arrive at it. Clear with this, guys? Now remember one thing. This is prepared by the storekeeper in the stores area, in the bin area, and he maintains only the quantity of units received, quantity of units issued, and the quantity of units lying in the balance. Are you clear with this, guys? Whereas, what is a stores ledger? This is prepared by the costing department. This is prepared by the finance, accounting, or the costing department, right? Now, what will they have? Here also they will have date, receipt. That is, receipt means what? Units coming in. Issues means what? Units going out. And then they will also be having what? The balance. So then what is the difference, sir? Under every column, receipts, issue, balance, they will be having quantity, rate, and amount. Quantity, rate, and amount. Quantity, rate, and amount. Why? Because costing departments need to record all this movement of inventory and all in their books. Now here, I can't record it in kgs or units. I need to give a monetary value to it. So both, first quantity, multiply this with the rate, you will arrive at the amount, and this amount gets recorded in your stores ledger control. So any receipts will actually increase the stock, so it gets debited. Any issues will reduce the stock being an asset, so any reduction gets credited. Are you clear with this, guys? So this is something that you need to understand. So bin card is maintained by the storekeeper, whereas stores ledger is maintained by the costing department. Clear with this, guys? So now with this knowledge, now you can write any fair, some 4 or 5 points you can write. Bin card maintained by the storekeeper, stores ledger maintained by the cost accounting department, right? Now bin card maintains only the quantity data. Here it contains both the quantity and value. Bin card entries are made when the transaction takes place. Now stores ledger, it is always posted after the transaction. Obviously, only after the transaction happens, they will be able to post it. Next, each bin card, each transaction is individually posted. Now, in your stores ledger, transaction may be summarized and then posted. Yes, in a day, at the end of the day, sir, total receipts is so much, you posted. Total issues is so much, you posted. Whereas in bin card, every moment I need to physically verify the quantity. Clear with this, guys? Bin card, any inter-department transfers do not appear. Why? Now, inter-department transfers will happen in your factory shop. No, let's say in the factory shop, job 1, job 2, job 3, 3 jobs are there. Between the jobs, they are directly interchanging. Now, stores department is not involved at all in this. Clear with this? So, inter-department transfers will not appear in the bin card. Whereas, material transfers from one job to another job are always recorded in for costing purposes. We have seen all these things. So, it is going to be the transferee job account debit to transferor account. That is the receiving job debit to your giving job. All your jobs is your WAP area. Clear with this, guys? So these two are generally a very important area in this from a theoretical perspective from this chapter, material cost. Beyond that, also some practical theory based on your EOQs or your stock levels can also come. So give more importance to this. The other areas, what I would suggest is give it one reading. I have just summarized it here neatly, so you can just give it one reading and you will be done with this particular area as well. Right now, let's go and do one last chapter, another popular chapter for theory. This is going to be your employee cost chapter. From this employee cost chapter, let us do a few theory areas from this chapter, right? So that, because generally in your exams, based on my trend analysis, number one, your introduction to costing, your introduction to cost and management accounting, that chapter comes in. Number two, your budgeting chapter comes in. Then popularly material cost, and then even your employee cost. These 4 chapters generally carry a lot of weightage in your theory segment. Sir, which means from the other chapters it will not be tested. No, this is not what I'm saying. From other chapters also it might be tested. But the day before your exam, if at all you want to give more priority, these chapters you give priority so that you will be able to get a complete hang of it. The remaining chapters, quickly go through whatever areas that I'm not covering here. Go through this concept decoder book. Everything I have put it in a very easy to understand manner. You need not run into pages. Quickly, just one look you give at it. That's about it. So go to your exam and just write whatever you know. Now, on that note, let's move on to the next chapter, which is called as employee cost. Now, please take your page number 84 of the concept decoder book. Now, overtime premium and its treatment. This is ideally, a numerical area, but at times they can also test the theoretical component in it, right? Now, overtime premium. Basically, there are 4 different manners in which you can treat your overtime premium. What is it? Now, how do you treat your overtime premium? Now, overtime premium, the treatment of overtime premium depends upon the overtime premium, the treatment. There are 4 different treatments, and the manner of treatment depends on the reason why you are incurring this overtime. So, the first reason why you can have an overtime is because of the company's policy. Because of the company's policy. Second reason, at the customer's request, customer's specific request. The third reason, it could be in order to meet your seasonal demand, right? And the fourth reason could be because of any abnormal reasons. Now, company policy, example, generally the company is overstaffed or generally the company is understaffed. For example, let us say a company requires to employ 100 workers. A job can be done only using 100 workers, but let us say I am hiring and keeping only 80 workers. Why? Maybe because I want to do some cost cutting and all. Now, genuinely, what generally takes 100 workers to complete a job needs to be completed by just hiring 80 workers. In this case, every worker I need to make them work overtime, correct? Maybe this particular company is a conjuice company, they don't want to spend much. In that case, obviously because of this reason, each and every 80 worker needs to be made to work overtime, right? Now, in that case, what happens? In that case, what happens? Ideally speaking, this is not overtime at all, right? Had you properly hired 100 workers, you might not have even required, there is no need for you to make them work overtime since you understaffed. What happened in that case? You made them work overtime. So strictly speaking, I will not call this as overtime premium, because whatever premium that you are paying, this is basically in order to save the cost of this extra 20 employees. So treat this as a direct wages only and charge it to all the jobs proportionately, evenly. Clear with this, guys? Now, the second one, in case I am not overstaffed, I'm not understaffed and all, it's not a company policy, but one particular customer is specifically coming and asking, sir, it is a rush order. Today itself, ask your workers to sit beyond their office hours and make them work, sir. Right? Whatever is the extra cost, I am willing to pay you. In this case, what you will do, it is again treated as a direct wages, but it is treated as a direct wages of that particular job where the customer is asking my workers to work overtime. Are you clear with this? Here also it is direct wages. But what is the difference between the first one and the second one? In the first one, I evenly apportion it to all the jobs, whereas the second one, only for those jobs where the overtime was actually worked, I charge it to those specific jobs. Clear with this, guys? Then, number 3, seasonal demand. In case of seasonal demand, for example, let's say I am in the business of manufacturing sweets. During the Diwali season, what happens? 2 months, so a month before Diwali and during the Diwali month, 2 months, there will be a peak demand. Now, generally what happens during that time, workload will be very high. I make all my workers work overtime during that season alone, right? In this case, it is not because of the company's policy. It is not attributable to specific customer, but it is normal course of business only that for me to have that overtime during a peak season. So it is definitely operation related to my business only. I know that, but it is not directly related to any specific job. In that case, I treat it as an indirect manufacturing cost. I take it to my production overheads. Are you clear with this? So it will enter into the product costing through the absorption route. Now, the fourth one and the last reason why you can have an overtime is due to abnormal reasons. For example, there was an earthquake or tsunami, or maybe there was a COVID time, right? Now, once the COVID lockdown was lifted, there was a lot of pending work to be done. All the workers, they had to work overtime. For that, the company incurred some overtime premium. In that case, now this is not related to business. Generally, it is not there. Extreme cases I am incurring. So in this case, what you will do, it is abnormal in nature. Treat it as a period cost. take it to costing P&L. Are you clear with this, guys? So broadly, there are 4 different manners or ways in which you can deal with overtime premium. Number 1, company policy. In that case, treat it as a direct wages, apportion it to all the jobs evenly. Customer specific request, treat it as a direct wages of that particular job. Then seasonal demand, take it to your production overheads. Abnormal reasons, take it to costing P&L. Logical, guys. In case this theory question comes, you can easily score about 4 marks. Now let's quickly move on to the next one. Now, yes, one more thing here, direct expenses, right? What are all the components of direct expenses? So it could be a theory question, royalty paid or payable, higher charges for specific equipment. So, and then customer specific design or drawing, or any specific software for which you are incurring a cost, any other cost that you incur directly related to production. Clear with this, guys? Simple royalty paid. Example, Maruti pays, let's say 50,000 rupees of royalty to Suzuki Incorporation for every unit produced, right? This is a royalty paid that comes under direct expense. Higher charges, specific design or drawing, or specific customer. Let us say L&T Limited, right? They undertake Chennai Metro Rail project, right? Now, for them to undertake this project exclusively for Chennai Metro Rail project, they hired one big JCB, right? On crane type of particular machine, they just vehicle or whatever it is called, equipment, they actually hired. For that, they are incurring higher charges. It's not general equipment. Specifically for that job, it is a direct expense of that particular job. Guys, correct? Right? Similarly, for them to do this particular Chennai Metro Rail project, first they drew a particular outline of this entire, the design or the drawing of this entire project was done. They hired the services of an architect, right? So whatever architect fee they paid was exclusively incurred for this job. They will treat that as a direct expense. Specific software. So any specific software for them to undertake a particular job, they are actually using a specific software and all. For that, whatever cost they incur, once again, since it is directly attributable to every single job, you will take that as a direct expense. Clear with this, guys? In case they ask theory in this area, you can easily go ahead and do it, right? Now, a couple of other things here. One second. Yes, attendance procedure. Now, this is a popular exam question again. Timekeeping versus time booking. What is the difference between the two? Timekeeping versus time booking. Timekeeping means recording the total attendance. Time booking means recording the attendance with respect to every single job. Sir, can you give us an example? Simple. Let us say a worker entered into the factory at 10 a.m. right? And he left the factory at 6 p.m. right? Now, recording this entry and exit is called as timekeeping. I keep the time of his entry and exit. In a day, he spent 8 hours in the factory. Guys, clear with this? This is called as timekeeping. Whereas, sir, in this 8 hours, let us say what he did. 3 hours is spent on job number 1. 2 hours is spent on job number 2, right? And 1 hour he spent on job number 3, right? And 2 hours he was idle. 2 hours he was idle, right? Now, I am coming up with a breakup of where he spent this 8 hours. That is called as time booking. I book his time to the respective job. That is called as time booking. So, tracking the entry and exit, his physical presence is called as timekeeping. Having entered the factory, where does he spend the time? Taking this relevant time and booking it to the respective job is called as time booking. This knowledge you have with this any kind of question in this area, you can attempt. Look at this. Timekeeping refers to the total attendance time of the employee, right? Whereas time booking refers to the breakup of time spent by the employees on various jobs, right? So key difference is what timekeeping is total time present. Time booking means time spent on specific tasks. Clear with this, guys? Exactly on the same line. Look at this. Timekeeping is also mentioned here. One second. Time booking. What do you mean by this? Time booking records how much time an employee spends on each specific job or a particular task, right? And the purpose, for the purpose of costing, obviously for costing respective jobs, how much time, based on that only the product costing can be done. For efficiency, you need this time booking, yes, to compare the actual with the standard, and of course to fix the responsibility. So when you are identifying the time variance, right? So who has spent more time on which job? So if he's efficient, if there is a favorable variance, you go and reward him. If there is an unfavorable variance, you can just go and actually penalize him for this. Clear with this, guys? This is the broader difference between your timekeeping and time booking. Clear with this, guys? Right? So that's the most important thing in this particular chapter. Generally, they can ask on this, sir, which means other areas they might not ask. I'm not saying like that. If at all they ask on other areas also, it could be kind of manageable, but I am just handpicking a few topics alone and I'm doing it here. From my viewpoint, I felt these are all certain important. One more thing, what are all the causes of labor turnover? What do you mean by labor turnover? Frequent entry and exit, movement of employees, change in the workforce, right? So what are all the causes? Number one, there could be personal causes. So personal causes, example, early retirement. I want to retire early, or maybe I'm looking for a job change, family issues, or discontent with the job environment. I don't like the job. These could be personal causes. Number two, unavoidable causes could be because of seasonal business nature. For example, in certain industries like your construction business, it is very seasonal. It is very seasonal. During rainy season and all, generally many constructions don't happen, right? So in that case, what happens? People move, people shift to other jobs, right? Shortage of raw material. So these are unavoidable. Relocation of plant, employee disability, disciplinary actions. These are beyond my control. Avoidable causes. What are the avoidable reasons? Job dissatisfaction. They don't like. The workers don't like. Poor relationship with supervisor, lack of training, no recreational or medical support, low wages or allowance. So broadly guys, you can just write whatever you know, whatever you know in this area. So what are the broad causes of employee turnover? Personal causes, unavoidable causes, and avoidable causes. Just write whatever you know. And how can you avoid personal causes? Look at this. The first one. One second. So in case of personal causes, obviously, predominantly these causes, you can't do much about it. But the first three causes are beyond the employer's control, right? The last cause can be managed by creating a positive and a healthy work environment. The first three causes, he wants a job change. The worker wants a job change, or he wants an early retirement, or there's some family issue that you can't do anything. But if he's discontent with the job, you can create a positive working environment. That is actually avoidable. Right? In case of unavoidable causes, you can't do anything. There is no remedial action. In case of avoidable causes like job dissatisfaction, poor relationship, lack of training, no recreational activity, or maybe you are not paying him well. Now, how do you remedy? What is the remedy available? How can you control this? It can be reduced by timely action or employee engagement or improved HR policies. Look, whatever is practical, you write it in your own language and leave it there. As simple as that. Clear with this, guys? So that's about the certain important theoretical areas of this particular chapter. Now certain other theoretical areas can come, like let us say they might also ask you, what is the difference between job costing and batch costing? Right? Simple guys. Now for you to know this, you should know what is a unit costing, what is a job costing, right? Unit costing basically means the cost of production per unit is arrived by averaging out. For example, I'm a pen manufacturer, right? How do you arrive at the cost per pen? Let us say in a year, I incurred a total cost of 1 lakh rupees, right? And let us say I'm producing 10,000 units. So cost per pen is how much? 1 lakh by 10,000. It is going to be rupees 10 per unit, right? This is going to be rupees 10 per unit, right? That's about it. Whereas, let us say I am a construction guy, right? Let us say I am a person like Purvankara or Casa Grande. Now, let us say I have incurred a total of 20 crore rupees and I have built 4 houses, 4 different properties. One is a bungalow, then I have built one duplex, then I have built one flat, and then I have built one villa. Now you tell me the cost per property, can I say 20 crore divided by 4, that is going to be equal to 5 crore. Whether it's a bungalow, big bungalow, or a small flat, the cost is going to be 5 crore? No. Here, cost needs to be ascertained on a job to job basis. So here I don't unitize, I call every unit of a cost object as a job, and here cost collection exercise is done individually for every single job. Guys, clear with this? In case of unit costing, the cost object is a unit. Here the cost collection exercise is done by averaging out. Here in case of job costing, I do it on an individual basis. Clear with this, guys? Now what do you mean by a batch costing? A batch costing is an hybrid version of unit costing and job costing. What do you mean by that? It takes one character from unit costing, it takes one character from job costing. Sir, can you give us an example? Yes. Let us say I am in the business of printing. I'm in the business of printing, right? So your stationery, I'm printing papers, right? I'm printing some black and white pages as well as color pages. Now, let us say I incurred a total cost of 20,000 rupees. I incurred a total cost of 20,000 rupees to print what? I incurred this total cost of 20,000 rupees to print 100 1000 black and white pages plus 1000 color pages, right? So what did I do? So I printed 2000 pages, 1000 black and white, 1000 color, right? And overall I spent how much? 20,000 rupees. Now you tell me, can I say the cost per page is, so 10,000 plus 1000, 2000 pages I have printed. So 20,000 divided by 2000. So the cost per page is going to be rupees 10. Can I come up with like this? Absolutely not. Absolutely not. What will I do? First batch, I am printing black and white. Totally, for me to print this black and white, for this batch, 1000 black and white pages, what is the cost you will collect? Let us say I incurred 5,000 rupees totally to print 1000 black and white pages. Now, what did I do? Now, this entire printing is done. Next, I added some color ink and all. Now, I started the next batch of color pages. I printed 1000 color pages. For this, the total cost incurred was 15,000 rupees. Guys, clear with this? Total is 20,000. Now, what do I do? I collect the cost for every single batch. I don't take the total cost of 20,000 divided by 2,000 pages. No, the cost collection is done on a batch to batch basis. This way, it is similar to job costing. Clear with this, guys? Now, having arrived at this figure, now what do I do? So now what is the cost per black and white page? Simple. Now I have this for this entire batch of 1000 black and white pages. So the cost is 5,000 per black and white page. What is the cost? Rupees 5,000 divided by 1000 pages. It is going to be rupees 5. Whereas here it's going to be how much? 15,000 divided by, it's going to be 15,000 divided by 1000 color pages. So for every color page, the cost is going to be 15 rupees. So now what I do, I take one character from job costing. That is what I do, the cost collection exercise on a job to job basis. And having collected the cost for every single batch, inside the batch, I unitize. This way, it is similar to your unit costing. So basically, your batch costing is a hybrid version of unit and job costing. It takes one character from your job costing and another character from your unit costing. Are you clear with this, guys? So this is all the story about your batch costing. So now we know unit costing, job costing, batch costing. With this knowledge, any theoretical question you can write, and you can also come up with your own examples in this area. That's about it, guys, right? So predominantly, whatever I felt was important in this particular segment of theory for your upcoming attempt, predominantly we have discussed here, and where I gave more importance to the first theoretical chapter, Introduction to Cost and Management Accounting, and that's about it. Guys, beyond this, what I would suggest is, even if you're watching this the day before your exam, so please understand, we are not covering the entire theory. I am just prioritizing and handpicking those topics which I feel is important from a theoretical perspective. Beyond this, what I would suggest is, quickly go through the concept decoder book. Every chapter I have done this. For every single chapter, I have neatly bifurcated your concept area and core theory area. Look at this, employee cost. I have mentioned core theory topics. Quickly just have a look at everything. I have neatly made this subheadings in a green font, right? And inside that point, certain important terminologies, I have put it in red ink. You can just go through it once. Don't try to mug up. Just try to get an understanding of that, and you're through here. Clear with this, guys? And many students commit this mistake of omitting theory and going. Definitely don't do that. Yes, theory can be kept as a choice, but that choice should be exercised in that exam hall. So don't go to the exam hall clearly omitting theory. In that case, you are not even giving yourself the choice, right? In the exam, you decide whether you want to write the theory or not. For that, some basic level of theory you prepare. And here in this video, certain important topics on theory I have just discussed here. Trust me, guys, trust me. Over and above this, just go through the concept decoder once. That is super sufficient for your exam. Now, even if they are asking some practical theory based on the concepts, you will be able to answer it, right? So on that note, I'm signing off in this video. I'm sure you guys are going to rock it in your upcoming exams. All the very best, and I will see you all in the next one. Thank you all so much. Bye-bye.